Hello students, Assalamu alaikum. Today we are going to solve um, structured paper, paper 2 of a different variant of O levels. So here is your paper. Okay. October, November 2021, paper 23. This is paper 23. Okay. We are doing paper 23. Okay. Now, first question. First question. First question. Okay. She was a trader. His financial year ends on 31st August. He does not maintain a full set of accounting record, but was able to provide the following information for the year ended 31st August 2021. Okay, it means it's incomplete records. Okay. Now we are given the revenue and markup. Acha, I'm telling you the trick which I've learned in ACCA. If in any question you find markup as 25%, it means uh, 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 it means margin is margin is margin. क्या चली गया? Margin is 20. Don't forget that. It's a trick. Only for questions in which markup is 25% given means margin is 20%. Okay. Now, this is the bank account summary. Okay. Assets and liabilities at the start of the year and at the end of the year given. Okay. Acha, okay. Now, first requirement is calculate the total purchases. How to calculate total purchase? The formula. It's the formula. The formula is payment to creditors. Now, add payables at end, less payables at start. Okay. So now payment to the creditors. This is payment to the payment to the trade payables, $257,700. $257,700 payable at the end of the year. Okay. Okay. Now trade payables at the end of the year is 29,600. Start of the year 32,600. So what we do? We will add. Sorry. We will add here 29,600 and we will subtract here 32,600. All subtract figures should be in bracket. 32,600 and we got the answer here. The answer is what would be the answer? This is my calculator. 257,700 plus 29,600 minus 32,600. 254,700 is the amount of 254,000. 254,700 is the amount of total purchases. Okay, this is a simple way of calculating total purchases, and you got 3 marks. Okay. Okay, now we have to make income statement. Now, making income statement, do you know it's very easy to calculate cost of sales directly by using 80% of the cost. We know margin is 20%. Markup is 25%, means margin is 20%. So we can calculate the cost directly also. But we are not going to do that. Okay. So revenue, the amount of revenue is given in the question, 3,20,000. Okay. So, okay. Now, cost of sales, we can calculate cost of sales directly, but it will deduct your marks. Okay. But we can assure it's a counter check. Okay, we have calculated the cost of sales correctly. Okay. So first, what we have to do, we have to write opening inventory or inventory at start. Inventory on 1st September 2020. That is how much? 23,500. Opening inventory. Closing inventory we are not giving. Okay. So that's why I asked you to calculate. Okay. Now, so opening inventory is how much? 23,500. Okay. 23,500. Now what we have to do, we have to add purchases over here. Purchases. Okay, we have calculated purchases in our previous section. That was how much amount of purchases was 254,700. Okay, 254,700. 254,700. Okay. Now class. What we have to do? We have to deduct inventory on 30th August 2020. So we don't know the amount of inventory on 30th August. Okay, no problem. Even then, what we know cost of sales. Cost of sales markup is, sorry. Cost of sales markup is 25%, means margin is 20%. So if we take 322,000 multiplied by 80%, 256,000 is the amount of cost of sales. 256,000. Getting my point clear? We know that. So if we deduct 256,000 minus purchases, 254,700 minus 256,000. Okay. Cost of sales 256,000. Okay. 23,500 plus 254,700, 278,200 minus 256,000. 22,200 is the amount of closing inventory we have calculated using the formula. That is 22,200. Okay, this is it. So you will get the answer here. Gross profit. The amount of gross profit 320,000. Okay, I'm doing it directly by 320,000 multiplied by 20%, 64,000. Or you can deduct it. What I forgot to put bracket. It's a negative figure. Now we have to deduct. So don't forget to put a bracket over here. So 64,000 is the amount of gross profit. Okay, getting my point clear? Okay, now come to our next heading, which is expenses. Okay, now expenses. Now come to the question again. Expenses 34,000 is given. Okay. Expenses owing at the end of the year. Okay. Accrued at end is going to be added 400. Okay. Accrued at end. Accrued at start is going to be deducted. Accrued at end is going to be added. Okay. And this 900. Shiv had withdrawn 900 for a family holiday during the year. He had included this in the expenses. Okay. $900 for a family holiday. So that was included in expenses. So we have to deduct. So what we have to do, we have to write expenses. Sorry. Expenses 34,000 minus plus 400 minus 900. So that would make your expense 34,000 plus 400 minus 900. 33,500. 33,500 is the amount of total expenses. Okay. What else? Okay. She wants to create a provision for doubtful debts of 3% of trade receivable. So ending trade receivable is 25,900. 25,900 multiplied by 3%. 25,900 multiplied by 3%. 777. So provision for doubtful debts, or provision for bad debts, whatever you want to write. Provision for doubtful debts, 777. Okay. Now, premises. The cost of premises is not changing. It means do not charge depreciation on premises. Okay. But equipment was not there at the start of the year. Equipment was bought at the end during the year. That is 16,000, and it is left with now 12,800. So 16,000 minus 12,800. The answer is 3,200 is the amount of depreciation on equipment. That is 3,000. If we add all the expenses here, we get the answer total expenses. Total expenses. How much? 33,500 plus 777 plus 3,200. Answer 37,477. 37,477 is the amount. Okay. Now, and here profit for the year 64,000 minus 34,477, 26,523 is your profit for the year. Okay, This is profit for the 26,520. This is answer. Okay. Name the accounting principle. Oh, whenever owner is involved, the principle is business entity concept. Business. Okay. She was always using inventory at cost. He is considering valuing the inventory on 31st October at selling price, as he believes it would result in a higher profit for the year. But we all know that inventory should be valued at lower of cost or NRV. Okay. This is a 5 month. Okay. Acha. Lower of cost or NRV. If we keep value of inventory at, if NRV is higher, and we keep at a higher NRV, the cost of sales would increase. Okay, profit would be unrealistic. Okay, acha. Prudence concept, consistency concept, and so many things you can write over here to discuss. What you call keeping of cost. Inventory valuation always lower of cost, not higher of cost. Okay. Jazz owns the printing business, recently incurred various expenditure during to her premises. Complete a table by inserting a tick to show each item of expenditure should be classified. The first one has been completed as an example. Rates on new extension is revenue expenditure. Okay. Carriage cost for roof tiles for new extension is capital expenditure. Legal cost for new extension is a capital expenditure. Repairs to office roof is revenue expenditure. Okay. And one thing you should always remember, capital expenditure happens once. Revenue expenditure occurs many times. Okay. Be careful. Business is expanding revenue. She needs more warehousing. She can have additional warehouse. She can rent an additional warehouse. The rent for the 6 months would be $40,000. Alternatively, Jen can purchase a warehouse of for $9,000. She can obtain a long-term loan of $200,000. Now, this is a question of advice. Now, when you rent something, you need less amount to pay off rent for 6 months. Okay. But when you buy a warehouse, you have to put, the bank is giving you 700,000, you have to pay interest on that, and $200,000 you have to arrange for to buy that. But that will become your property, and the value of property always increases. This is also a case. But all the repairs, maintenance, and everything is up to you. When you don't need to that warehouse, you can resell the warehouse, and it might be a capital gain for you. But you rent it after 6 months, the other party will increase the rent. Initially, you don't need a lot of money to rent a premises, no repairs and expense. And if you don't want it, or if you think, but in my opinion, if she thinks that her business is increasing day by day, and at present she is in a position to pay off rent, initially it is good to buy on rent, because if she could not maintain, she could not attain, or she could not gain in the long run, so she can dispose the rented property easily. Okay. Now, an extract from Jazz statement of financial position at 31st December 2019 showed the following. Fixtures, accumulated depreciation, net depreciation. During the year ended 31st December, the following transaction took. On January 1st, 2020, fixtures $30,000 was purchased by check. 30th June 2020, fixture was sold for $6,000, which was received by check. This fixture has been originally purchased on 1st January 2018 for $20,000. Jazz depreciates fixtures on a straight line basis. She assumes fixtures will have a useful life of 4 years, at which time the residual value will be 10% of original cost. Depreciation is charge for each part of the profit, each part of the year for which the fixtures are owned. Okay. Now, prepare the following accounts for the year ended 31st December 2020. Balance each account and bring down the balance on 1st January 2021. Okay, now we have to make a T account. Opening balance 115,000 is given at the start of the year. On January 1st, fixture 30,000 were purchased by check. So again, Jan 1, value 30,000. This one, 30,000 1st January and by check. So what we have to do, we have to write here bank fixtures increases debit. How much? 30,000. Now, second item. On 30th June, fixtures were sold for 6,000, which were received by check. These fixtures had originally been purchased on 1st January 2008 for 20,000. So what we have to do, we have to take for a non-current asset account, we have to take the original value of asset, that is 20,000. So we are shifting on which date? 30th June 2020. So here we are going to write 2020 June 30 disposal account. Disposal account. How much? 20,000. Done? Okay. There are two transactions in the year. Okay. Now, what we have to do on 31st December, balance CD, we have to calculate. CD. Now, if we get total of the debit over here, now this is 145,000 and balance should be $125,000. Here $145,000 and here 2021 Jan 1 balance 125,000. Okay, got it. That's easy. No problem. Move. Okay, now we have to make provision for depreciation of the fixtures account. On 1st January, balance is 77,625 is given. Okay. Now, what he has to do, we have to transfer the to on 30th June provision for that asset which we have sold on June 30. June 30, we have to shift it to disposal account. Getting my point here. Now, the asset which was bought on 1st January 2018 for $20,000, 10% is the scrap value. It means 20,000 multiplied by 90%. We have to calculate depreciation on 18,000. Life is 4 years, so each year depreciation is 4,500. 2018, 4,500 plus 2019, 4,500 and 6 months of, because we are using this convention. This is the convention. Depreciation is charged for each part of the year, means every month. So 4,500 of year 1, 4,500 for year 2, and half year of 4,500. 4,500 divided by 2, 2250. So total depreciation 11,250. 11,250. Getting my point clear? This is the depreciation of the asset which we have sold. Okay. Now we have to calculate on 31st December the how much we have calculated depreciation for this year, and we are transferring to income statement. Getting my point clear? How much we are transferring to income statement. Okay, getting my point clear? Okay. Now what we have to do? Okay, now balance is the total value of assets is 125,000 at the end of the year. This is the value given. Okay. Now multiply by 90% because we take the value of assets 90%. So that is 112,500 depreciable cost of the asset divided by 4. So 1 year depreciation is 28,125 plus the depreciation of the 6 months of that machine which we have disposed here. So 28,125 of the remaining assets plus the 2250 we calculated for this machine which we disposed on 30th June, that is 2250. 125,000 multiplied 90% divided by 4, 20,000 plus 2250. 30,375. 30,375 is the answer. Okay. So now on 31st December 31st, the balance sheet is how much? Okay. We have put a line and a line and a line. Now see, total is 77,625. 77,625 plus 30,375, 108,000. 8,000 minus 11,250, 96,750 is your balance. Now take 2021, January 1, balance PD, 96,000, 96,750, and we got 8 points. Getting my point here? Now they ask you the next question. Oh, you have to make disposal account. Fixtures disposal account. So that was now 2020 June 30. We have fixtures. How much is the amount of fixtures? 20,000. Now 2020 June 30. deduction for depreciation. Provision for depreciation, that was 11,000, I think. 11,250. Now again, 30th June, we got cash. How much? 6,000. Got cash 6,000. Acha. On December 31st. December 31st. Transfer to income statement or loss. You can say loss on, because income statement coming on this side, so we have sustained the loss here. So what we have to do, align. So the total is 20,000 here. So if we minus 20,000, if we deduct from 20,000, 11,250 and 6,000, so answer is 2,750. That is loss on disposal. 2,750. 2,750 is the loss on disposal, and you earn this. Okay. Question number 3. Okay, allow me to drink tea. Okay. Now, this is a question of errors in suspense account. Anil is a trader. The total of the tribunal has prepared on 31st December 2020 did not agree. The debit exceeds the credit by 5,140. It means suspense should be initially the balance of the suspense account to be brought down is 5,140 on the credit side. Okay. Now, sales account had been undercast. It means we have to increase the sale. When we have to increase the sale, we will credit the sale, we will debit the suspense account. Okay. Sales return of 520 had been posted as a credit to purchases. The correct entry has been made in customer account. Okay. When sales return was supposed to be debited and customer was supposed to be credited. Customer was credited correctly, but instead of debiting sales return, we credited purchases account. So what we have to do, we have to debit sales returns, we have to debit purchases again, and we credit suspense account. Okay, bank charges 320 had been entered in the cash, but it had not been entered in the bank charges account. So we have to debit bank charges, credit suspense account. Easy. A check refund of $600 for insurance overpaid had been entered on the wrong side of the bank account. When we get a refund, we have to debit bank and we have to credit insurance. But what we did, we credit bank and we did not do anything with the insurance account. So first we have to rectify bank account by debiting bank with $1,200. Insurance should be credited by 600, which was left to be credited, and 600 for suspense. Getting my point? Okay. Now, error number 1. What we have to do? We have to debit suspense account and we have to credit. Getting my point here? We have to debit suspense account and we have to credit sales account by how much? 7,100. 7,100 and here 7,000. Now error number 2, we have to debit sales returns. It was left to be debited. Purchases was wrongly credited, so we have to debit purchases. Okay, and we have to credit suspense. Okay, that was 520. The customer account was actually recorded, so we don't need to worry about the customer's account. That was corrected as 1,040. Now, error number 3. In error number 3, that was very easy. Bank charges debit. How much amount? 320. Bank charges debit. Suspense. Now, fourth, okay, we have to debit bank because bank was actually credited, but it was supposed to be debit. So when we are coming on the correct side, we have to make it with double amount. Okay, insurance was left to be created, so we are creating insurance by 600, and the difference is posted to suspense 600. Getting my point clear? Narratives are not required, so don't worry about narratives. Not required. Okay. Now come to suspense account. Difference of trial balance is given. So keeping in mind all the entries. Okay. Forget about the date because they have not given you the date, so don't worry about the date. In our first entry, we debited suspense. Okay. So we will write suspense debit. The reason was sales, and that was 7,100. Okay. Now, in the second entry, we create suspense by 1040 for sales returns and purchases. So what we do, sales returns and purchases. That was 520 and 520. In the third entry, suspense again created for bank charges. That was 320. And in the fourth, for the rectification of bank account, we have to credit suspense by 600. Getting my point? So that's all for, I think the total should be the same. 5140 plus 520 plus 520 plus 320 plus 600, 7,100 on both the sides. Yes. That's all. $7,100. It means we have rectified all the errors. Knowing two types of error not disclosed by trial balance. Errors not affecting trial balance. There are 7 errors not affecting trial balance. Error of omission, error of commission, error of principal, compensating error of complete reversal, error of original entry, error of transposition. Almost 7 errors there. Okay, so you can write any two of them. No problem. Question number 4. Karishma runs her own business. The balance in her book on 1st October 2020 included the following: insurance account 1,700 prepaid, and electricity account is 1,800 owing. During the financial year 30th September 2020, Karishma made the following payments by check: insurance payments 7 February 3,400, 13 August 3,500. Okay. Electricity payment. Okay. A refund of $300 for insurance overpaid was received by the bank. Transfer on 28 February 2021. The insurance paid on 13 August was covered a period of 5 months to 31st December 2021. At 30th September 2021, amount of $2,000 was owing for electricity. Oh, insurance account. Okay. So when we are making insurance account, what we have to do? 2020. The starting year is October 1st, 2020. अक्टूबर दिया, क्या लिख दिया, balance BD. That was, I think, prepaid. So prepaid is recorded on the debit side of the BD, and that was 1,700. Got my point here? Yes, 1,700 prepaid. Okay. Now, during the year insurance, 7th February 2021 and 13 August 2022, we paid insurance twice by check. So 28th February and 13th August. 7th February and 13th August. Okay. Refund of $300. Let's see. So again, now a refund of the insurance paid on 13th August covered a period of 5 months to December 31st December 2021. When we are paying both the insurance, what we have to do 7th February and 13th August. February 7, insurance debit, bank, credit. So we have to write here bank, and we have to write here the amount 3,000. Got it? Okay. And on 13th August 13, we have paid again 3,500 bank debit, 3,500. And on the same date, we received here 2020 August 13, we received a refund. So bank debit, insurance, credit. So we write the result bank. Result is 300. Okay. Now, this 3,500 paid in August, we have to move till 30th September. August 30th is for around 5 months. Now, 3,500 we paid for 5 months till December. We are ending on 30th September. So 3 months is for is the prepaid, is the remaining prepaid of insurance. So 3,500 divided by 5, 700 per month multiplied by 3 prepaid. So the balance be CD on September 30. Balance CD is 2,000. And the difference of both the sides will be posted as insurance expense for the year transferred to income statement. Are you getting my point here? See, get the totals. Yeah. Yeah. And now get the totals. If you get the total on this side, that is 1,700 plus 3,400 plus 3,500, 8,600. Total is 8,600. Okay. Now minus 300 minus 2,100, 6,200 is the insurance expense for the year transferred to income statement on September 30. Getting my point here? So, speeding there. September 30 transferred to income statement 6,200. Balance obviously here 8,600. Okay. And on again October 1st. Okay, October, sorry, October 1st, we have to write the year as well. 2021. First, balance BD. How much? 2,100. अच्छा ये जरा हमें सही करना पड़ेगा. I forgot to 2021, and here we also have to this is insurance account. Okay, electricity account. Oh my god, oh my god. Now, question number last. Okay, electricity account. So opening balance was accrued, I think. No? Owing means accrued. At the start of the year, 1800 were left to be paid. Okay. So what we do? 2020. October 1st. Balance. BD, 1800. Okay. It's a liability account. Okay. Now what we did? Now 14th October 2020 we paid 1800. 24th January we paid 1800, and 26th May we paid 18. So when we pay electricity, three times. So every time electricity debit, bank credit, so we have to report them on the debit side. Okay. 2020 October 20. 1,000. Then 2021 Jan 24 we paid 1800 via bank. Again on May 26 we paid. May 26 we paid via bank. 1,000. Okay, we paid. Acha. Now, what we have to do? Now we have to study. This is that we have to study what happened with electric vehicles. On 30th September 2021, an amount of 2,000 owing for electricity at the end of the year. So what we do? We will write here September 30 balance CD. Balance CD. Okay. Now what we have to calculate? we have to calculate how much we are shifting to income statement for electricity charges on September 30 we transfer. Very easy. What we have to do here and here, right? The total of it would be 18 3s are 5,400, 5,000, 1,800 multiplied by 3, 5,400, 7,400. Minus 1,800, 5,600 is transferred to income statement. 5,600 transferred to income statement. Getting my phone clear? 5,600. So total here 7,400. Now 2021 October 1 balance BD 2,000. Done. Karishma considered changing her electricity supply. The new supplier offered Karishma a 2-year contract at a fixed monthly installment for 50 payable by direct debit. Advise Karishma whether she should change the new electricity supply. Justify your answer with two advantages. And advantage 5,600 is divided by 12. So that is $466 per month. 450, yes, it's wonderful. But then she has to keep $450 every month in her account to pay off. I think it would be a great offer. You can write advantages and disadvantages. Okay. Next is done. On 1st October 2020, Karishma decided to rent out her premises to Moore at an annual rent of $1,965. And so during the year 30th September 2021, Noor made the following payments to Karishma by check October 1st, March. The amount received on 8 August included rent of 500 covering the period October to December. So what we have to do? Annual rent 1965. Okay. That's it. Following payments were received. So we have to be very much careful about making this account. So here we go. 2020 October 1. Okay. She received how much amount she received? $800. So bank debit and she sent income account credit by $800. Again, she received on 2nd March 2021. 2021 March 1st, March 1st, no? March 2nd. March 2nd, she received bank debit and receivable or income account credit. Amount is 825. The third time in the year, during the year, she received an 8 August 2021, 850. August 8 bank debit. This 850 amount, what this 850 amount, we have to be careful. 510 out of 850, 510 is for October, November, and December. So divided by 3, 510 divided by 3, 510 divided by 3, 170 for 1 month. 2 months is prepaid. That is 340 is rent is received in advance. Okay. Okay, but no. Sorry. Okay, we have to end on 30th September. No? Okay, we have to. Okay. So it means when we are ending up, what we do, what we have to do, sorry, we have to write over here September, September 30, balance CD 510, and the difference of these two sides could be reported as transfer to income statement as rent income. So get the total over here. That is 2,400, 2,400, 2,400, 2,475 minus 1965 is transferred to, that is 2021 September 30 income statement, 19 and 2,000. Now on 2021 October 1st balance BD 500. Revenues received in advance is a liability account. Okay, 500. Identify the section of the statement financial result in which the balance of the rent receivable account would appear. Liabilities, current liabilities. Last question. Oh my God, this is subscription account. We have to make a subscription. Okay, for this subscription account, what we have to do on first January, we have to we know on 1st January 2020 subscription and arrears receivable. So that is the asset account, opening balance on the balance on the debit side 700, and 1100 is we received on 1st January as an advance. That is going to be reported as a liability account on the credit side. Okay, in subscription account. So 1st January 2020, 2020, then one balance BD, that is 700, and on the same date 2020 January 1st balance BD 7. Done. Okay. Now during the year, subscription received during the year 90,200, so bank debit and subscription account credit, that is 19,200. So we'll take the date December 31st. Bank debit subscription credit 19,000. Now subscription in arrears at the end of the year. So the balance, this balance is going to be reported on credit side, and this 900, this is which you call this is the balance CD on the credit side. This is balance CD on the debit side. Got it? So and this is bad debts, $80. So what we do, again, December 31st. Irrecoverable debts or bad debts, whatever you want to write. Irrecoverable debts. You have to put 80. Now, again on December 31st, balance CD, that was areas. The balance CD in areas is how much? 300. So that is going to be reported over here. Okay. Now here we have to write December 31st transfer to income and expenditure account. Income, income and expenditure. Okay. Income and expenditure account, we have to shift. We don't know, but I'm not. Okay. But we know the balance CD that was for advances. Balance CD. That is how much? Balance CD 90. Done? Okay. Now we need a line over here. We are closing 2020. Okay. So check the balances. Now 700 plus 19,200 plus 80 plus 300, 20,280. Sorry, what I did wrong. That was 1,100. 1,100 plus 19,200 plus 80 plus 300 is 20,680. 20,680 minus 700 minus 9. 20,680 minus 700 minus 9. 19,080 is going to transfer to income. 19,080. So that is 20,000. Now 2021 January 1 balance BD balance BD, yes, definitely 300. And again on this side 2021 Jan 1 balance BD is 9. That's all. Okay. Move. Income and expenditure account for VPL Sports Club for the. Okay, now what you have to write? Income, the first heading. Income. Now subscription. Subscription 19,000. Sorry, 19,080. 19,080 Now, other income, competition receipts, dinners, dance, ticket sales. Okay, 7,300 and 6,500. Competition receipt. That was 7,300 and dance competition. And dinner, dance, tickets. Dinner, dance. We got how much? 6,500. So total income, we add them. These three, total income we have how much? 1900 plus 7,300 plus 6,500. Answer is 32,808. This is total income. Now, second heading, expenditures. Expenditures. Go again. What are the expenditures? Yes. Competition prices, payment, dinner, dance cost payment, and general expenses. Okay. General expenses. Oh, general expenses going at the start of the year and at the end of the year. So what we have to do, general expenses is how much? 11,500 plus going at end 500 minus going at start 400. So 11,600 we have to report general expenses. 11,600. General expenses. 11,600. General expenses. Okay. Now, what about equipment? Equipment at start of the year 23,000. We bought 12,000. 23,000 plus 12,000 we bought. Ending 30,000. 5,000 is depreciation on equipment. Okay. So depreciation on equipment. 5,000. Got it? है ना? अच्छा, उसके बाद नेक्स्ट this irrecoverable debt 80. And completion prices direct dance cost. Completion prices. Direct dance cost. That was 4,100 and dinner dance cost was 6,200. Okay, so our expenses and see total expenditures. Total expenditures. Expense. 11,600. 11,600 plus 5,000 plus 80 plus 4,100 plus 6,200. Total 26,980. 26,980. And surplus is how much? 5,900. Yes. Yes, your surplus. Okay, that's your 9 months. Okay. Okay. If we ask them to pay subscription in advance, means more cash inflow, but less cash. Right? That's all. Okay, that's end of the paper. So that's all for today. Okay, students, that's all for today. Inshallah, I'll come up with another paper tomorrow. Inshallah, for AS, I think. Inshallah. So if you want to ask something, you can leave a comment. I will try my level best to answer you, reply you. If you want me to solve a question, leave a comment. I'll try my level best to complete solve the paper for you. Okay. Most of the people who are visiting my channel, who are viewing my videos, kindly subscribe to my channel. Thank you.